They say during the gold rush, the smartest money wasn't chasing gold, it was selling shovels. Fast forward to today, and the new gold rush is drones. Defense, logistics, surveillance, and even agricultural drones are everywhere. And the companies supplying the technology that keeps them flying are quietly positioning themselves for explosive growth. In this video, we're not chasing the hype. We're looking at the shovel sellers of the drone age, starting with tiny penny stocks trading under $5 that focus on the infrastructure behind drones, including robotic systems, sensors, AI platforms, and even battery safety. These are the enablers, the companies that profit regardless of which drone dominates the skies. Now, penny stocks are high risk, high reward. They can soar on a contract win and crash on a single setback. That's why I'll walk you through the fundamentals, growth catalysts, and risks of each, so you can see which have real staying power. So if you're ready to dig into the shovel sellers of the drone revolution, hit that like button, share this with those looking for similar opportunities, and subscribe for more deep insight into high-potential plays. Let's get started. During every wave of innovation, some companies build flashy products, while others build those that protect against them. In the rapidly evolving world of drones, Drone Shield Limited, ticker DRO, has positioned itself as a specialist in detecting, tracking, and neutralizing hostile drones for militaries and governments worldwide. From niche to necessity. Once viewed as a niche market, the counter-drone market has become unavoidable. From Ukraine's battlefields to Middle Eastern conflict zones, drones have proven both invaluable and dangerous. Militaries are now racing to defend airspace not just from fighter jets, but from swarms of small, inexpensive UAVs. That urgency is turning Drone Shield from an under-the-radar Australian small cap into a name investors can no longer ignore. The company's technology combines radio frequency sensing, radar, electro-optical systems, and AI-powered fusion software to detect and counter drones in real time. Its solutions range from handheld drone guns to vehicle-mounted and fixed installations, offering militaries flexibility for the battlefield. For years, investors questioned whether Drone Shield could secure contracts beyond small pilots. That question has been answered. In the past year, the company announced a $40 million European military contract via a reseller, its largest deal to date. $21 million in Asia-Pacific contracts for vehicle-mounted and fixed counter-UXS systems. Nearly $6.5 million in Latin American contracts and repeat orders from the U.S. government. Taken together, these deals mark Drone Shield's shift from a startup chasing attention to a supplier trusted by multiple governments across continents. On the balance sheet, Drone Shield is unusually disciplined for a defense penny stock. It carries virtually no debt and has more than $132 million in cash on hand, as reported in recent filings. Shareholder equity sits comfortably above $200 million, providing ample room to scale. Revenue reached about $37 million in the financial year 2024, up modestly from the prior year. Gross margins are healthy at roughly 67%, but the company still reports operating losses and negative free cash flow. In other words, it's showing traction, but not yet consistent profitability. Drone Shield operates in a sector with undeniable tailwinds. Militaries worldwide are increasing their budgets for counter-drone technology, and Drone Shield already has a global customer base. Its minimal debt and strong cash reserves reduce financial risk, while its expanding contracts offer visibility into future revenues. But the risks are equally clear. At a share price of around $2.15, Drone Shield trades at a valuation that is far richer than its current revenue base justifies. Delivering on massive new contracts requires flawless execution, scaling manufacturing, controlling costs, and meeting delivery schedules. Any stumble could deflate investor enthusiasm as quickly as it has risen. It offers the opportunity to ride the wave of the counter-drone revolution, a future where the skies may be filled with UAVs, but the profits may flow to the companies building the shields. Moving to the following drone stock, one of the names gaining attention in 2025 is Ondas Holdings, ticker symbol ONDS, a microcap positioning itself as a full-stack player in drones and counter-drone systems. The key question is whether Ondas belongs among the decade's most promising growth stocks, or whether it remains too speculative to touch. At its core, Ondas is building a multi-domain robotics ecosystem. Its flagship Optimus platform is a drone-in-a-box solution that can launch, land, recharge, and swap payloads without human involvement. The company also developed the Iron Drone Raider, an autonomous system designed to intercept hostile UAVs. Unlike competitors that focus solely on the air, Ondas has expanded horizontally, acquiring Motion to add ground robotics and tethered communications, and taking a controlling stake in smart precision optics to bring electro-optical sensors in-house. That vertical integration gives it more control over the autonomy stack and makes it appealing to defense buyers seeking turnkey solutions rather than piecemeal contracts. The financial momentum is striking for a company this size. In the second quarter of 2025, revenue climbed to $6.3 million, a more than five-fold increase year over year. Gross margins flipped from negative to 53%, and the backlog now sits at roughly $22 million. Ondas ended the quarter with nearly $69 million in cash and eliminated outstanding convertible debt. Losses remained at approximately $9.2 million last quarter, but the company is beginning to exhibit operating leverage as orders increase. Critically, Ondas is not selling concepts. It has secured contracts worth millions, including a $14.3 million order for Optimus systems, a $2.7 million Iron Drone Raider deal, and a $3.50 million order for uncrewed ground vehicles tied to its Apiro acquisition. On the partnership side, it is working with Mistral to accelerate U.S. defense sales and with Rift Dynamics to distribute the WASP attritable drone platform, with an initial order of 500 units already in place. These relationships lend Ondas credibility in markets where procurement cycles are lengthy and competition from defense primes is intense. For investors who follow AI stocks, robotics stocks, and defense contractors, Ondas fits squarely into the category of growth stocks. The thesis is straightforward. Global demand for counter-drone systems and autonomous surveillance is expanding rapidly, and Ondas has the technology and contracts to capitalize on this growth. With a market cap still under $1 billion, even modest contract wins can significantly impact the company's performance. That said, the risks are not trivial. Ondas remains a microcap with revenues in the tens of millions, and profitability is not yet in sight. Regulatory hurdles for fully autonomous drone operations remain unpredictable, and competition from both startups and established defense players is intense. For shareholders, this means that volatility is not the exception, but the baseline. Still, the appeal is clear. Ondas speaks to the same type of investor who recognized early potential in Palantir, AeroVironment, or Symbotic, those who see defense and automation as secular, not cyclical trends. If management continues to convert backlog into revenue, expand margins, and integrate acquisitions effectively, Ondas could graduate from a speculative microcap to a recognized small-cap growth story. For now, ONDS should be viewed as a high-risk, high-reward bet on the future of drones and counter-drone systems. It is not yet a stock to buy and hold for safety, but it is one to watch closely for growth potential. In a market increasingly shaped by autonomy and security, Ondas has positioned itself at the intersection of these two key factors. Next is Amprius Technologies, ticker symbol AMPX. This company is betting that better batteries will be the real breakthrough. Traditional lithium-ion batteries rely on graphite anodes. Amprius has developed silicon-anode cells that promise higher energy density, faster charging, and longer lifespans. For drones and unmanned aerial systems, that means longer flights, heavier payloads, and reduced downtime. For defense contractors and the Pentagon, it's the difference between minutes of surveillance and hours. The financial picture is improving. In Q2 2025, Amprius reported $15.1 million in revenue, up from $11.3 million the prior quarter. Gross margins turned positive for the first time, reaching roughly 9%. It has also begun shipping batteries to customers in the aerospace and defense sectors, including orders from Nordic Wing. Proving its technology in demanding military and aviation environments could accelerate adoption across drones, robotics, and electric aviation. Profitability remains elusive. Heavy R&D spending, negative free cash flow, and a premium valuation leave little margin for error. Battery production is capital-intensive, and Amprius faces competition from giants like Panasonic and EATL, as well as other startups racing to commercialize silicon anodes. Execution on scaling and contracts will be critical. AMPX offers exposure to one of the most critical enablers of the drone and robotics revolution: safe, efficient, high-density power. The opportunity is enormous, but so is the risk of execution. If you had to pick just one of these three drone stocks for the rest of 2025, which would it be and why? Share your answer in the comments.